Hello, everyone. Today we are going to present TDBank Financial Analysis Report considering the last 5 years. Our group is composed by Anderson, Jacqueline, me, John, and Tenzin. Our presentation are going to take around 50 minutes and contemplates common size analysis, DuPont analysis, per group analysis, and recommendation. Let's start now with common size analysis with John.
Thank you, Jacqueline. And now we're going to start with the common size analysis with the balance sheet vertical analysis. So consider the asset distribution. The loan line represents the largest distribution with a percentage that range between 42% and 48% in the last 5 years. This result indicates that the loan concession is the primary source of income. Liabilities, the total liabilities correspond to 94% of the asset for the past 5 years, demonstrating stability. Most of the company liabilities are deposit. In equity, the total has been maintained at 6% of the total assets over 5 years. In retained earnings, has been maintaining 3.4%, increasing over time. This implies that the bank has been able to maintain this profit and increase the size of equity of the bank. Next slide, please. Now we have the horizontal analysis from balance sheet. And we want to start with the asset, cash and others are now really reduced than the 2020, especially in 2023, which is 19 lower than in the previous year. The securities amortized cost grow in value from 2020 to 2022, but in 2023, it dropped significantly by 10%. Purchase security increased 28% in 2023, but the numbers for the previous 4 years are even. Deposit shrunk by 3% in 2023, after increasing by 9% in 2022. Liabilities, there is a solid structure of liabilities with some fluctuation in particular items such as trading deposit, financial liabilities at fair value. On equity, earnings have increased considerably over the last 4 years. Now we're going to talk with ratio. Next slide, please. In ratios, the ROE for 2023 has a sharp drop of 44% compared to the previous year. The year 2021 and 2022 had an upward trend that made us expected a better 2023. The efficiency ratio has had an upward trend and high values, which mean that the company is less efficient in controlling expenses. The ratio is still lower than in 2019. The net interest margin show a positive trend over the last 2 years, recovering from decline of in 2020 and 2021, but the ratio is still lower than the 2019. Price earning ratio show high volatility over the last 5 years, especially last year, with an increase of 50%, achieving the best ratio of this period. Now we're going to talk about the DuPont analysis. Tenzin, we're going to talk about this. Please, Tenzin.
Thank you, John. And hi, my name is Tenzin, and I'm going to talk about the DuPont analysis. When we say DuPont analysis, it is a part of ratio analysis, the profitability ratio. DuPont analysis mainly focuses on return on equity ratios. So when we say return on equities, it is divided into three components. It's like a profit margin, asset turnover, and a financial leverage. So firstly, I'll talk about the net income and total revenue, which is the components of our profit margin. So net income, it has peaked at like 17.4 billion in 2022 and dropped to like 10.8 billion in 2023. So we can say that there is the TDBank has peaks and the valleys in the profit or the net income. So when you talk about total revenue, the total revenue mainly demonstrates how effective the bank is in coming up with income from a business operations. So net in, total revenue has increased steadily from like 41.1 billion in 2019 to 50.5 billion in 2023, which we can say that the TD Bank is doing quite well. So regarding the profit margin, the decrease in profit margin could indicate the rising costs or declining revenues, which may need to be addressed through like cost management strategies and so on. So to talk about the total assets and shareholder equity are quite important while analyzing the position and solidity of the bank. And the total assets grew significantly from like 1.4 million to 2.0 trillion in the year 2023. However, shareholder equity has lesser growth rate from 87,701 million in 2019 to 112 million in year 2023. So the total assets and shareholder equity mainly talks about how efficient the bank uses its assets to generate the revenue. So now I'll talk about the return on equity. The main part of DuPont analysis is to calculate the return on equity. So return on equity dropped from like 15.5% in 2022 to 9.6% in 2023, which clearly indicates that which clearly shows the bank's ability to generate return on its equity has decreased, and we can say that there is a least net income despite growing in the revenue and assets. So here comes to the end of DuPont analysis, and the next peer group analysis will be presented by my friend Anderson.
Thanks, Tenzin. Hello, good evening, everyone. Today I will present some key findings from our group project, analyzing and comparing the financial performance of TD Bank and RBC. Looking at the revenue, RBC has a larger scale of operation and generates more total revenue than TD Bank. However, when we look at profitability, TD Bank is more efficient and at converts revenue into profits. TD Bank has higher net profit margins and return on equity compared to RBC. In terms of assets, TD Bank has significantly larger loan assets on its balance sheet compared to RBC. Loans make up over 50% of TD's total assets, whereas RBC has a more diversified asset mix, including a higher proportion of securities and trading assets. Both banks have similar liability compositions, with around 50%, 60% of liabilities coming from deposits. However, TD funds more of its assets growing through deposits compared to RBC. In summary, while RBC bringing in more total revenue, TD Bank generates higher returns by focus on growing its core lending business and funded primarily through stable deposits. Our analysis shows TD strategy has allowed it to achieve better profitability relative to the size of its operation. Now, go ahead, Jacqueline.
So now let's continue with our last part, recommendation. So we select here recommendations, some points from the analysis that we made about common size analysis, ratio analysis, and DuPont analysis. Let's start with common size analysis. The company must evaluate its strategy to improve its profitability and improve the cost management. The indicators also show a significant deterioration, which may affect the confidence of investors, the markets, and also the customers. About the ratio analysis, the bank should take control to reduce some costs and improve the profitability. The ratio of income before taxes decreased in the year of 2023, 26%, from a peak that happens in 2022, when this ratio achieved 42%. The bank needs also to take some measures to enhance its operational efficiency and also boost the revenue. About the DuPont analysis, the right return on equity in 2022 shows that the bank used the equity in an efficient way, and in 2023 also declined, showing that these indicator demonstrate that this is a problematic area and needs attention. So finally, TD Bank should explore new market opportunities or expand new operations to increase its total revenue, and that way improve indicators to be more comparable, to have better benchmark compared with your major competitor, RBC Bank. Thank you so much for watching this presentation.